Hello, good day, guys. My name is Nick, technical analyst with SuperForex. Today, we will be looking at the technical analysis on the currency pair NZD USD. And usual, as first, we'll talk about fundamentals before we move right down to technicals, which is going to be purely what we'll be seeing on the chart. We have seen that the NZD USD has surrendered at the 0.6240 landmark as market mood dampens, and RBNZ hogs the limelight. NZD USD has slipped firmly below 0.6240 as the risk of market mood has strengthened a bit, while anxiety amongst investors is soaring ahead to the opening of the US markets after an extended weekend. We have a promise of a cyclone relief package from NZ HIPIX and could propel inflationary pressures further. The NZD USD pair has slipped below 0.6240 in the early European session. The Kiwi asset is expected to continue its downside movement as anxiety among investors is soaring ahead of the opening of the US market after an extended weekend. S&P 500 futures are showing losses as the US markets are yet to show the impact of US-China tensions. Apart from that, we have also seen somewhere that a missile launching by North Korea on weekend near Japan's EEC region event will also be discounted by the market participants, of course, and the struggle of the US dollar index, the XY, for pushing its auction above 103.70 in intact at the time of writing. Right. Meanwhile, the 10-year US Treasury yields have trimmed some gains and have slipped a bit below near 3.85%, while investors' entire focus will remain on the interest rate decision by the Reserve Bank of New Zealand, which is scheduled for Wednesday's February monetary policy of RBNZ, having an extremely important, as the New Zealand Prime Minister Chris Hipkins has promised a cyclone relief package of 300 million New Zealand dollars. I mean, in times where the New Zealand economy it's struggling to tame galloping inflation, the fresh release of the helicopter money carries the potential of propelling inflationary pressures further. Now, the situation is extremely troublesome for RBNZ Governor Adrian Orr, as small rates could impact the economic activities ahead of the press consensus, while the RBNZ is expected to announce a hike in the official cash rate by 50 basis points to 4.75%. So what we are to expect from this, if we are to have this downward move, we've seen a loss of momentum here, and this signals a push up to a new zone, and most likely to hit the most recent resistance zone at 0.626000, and a push up to a new zone at 0.63166, of course, which you can call good money. So if we make an entry at this stage and let our trade run up to this point, we're looking at nothing less than 90 pips from that entry, of course, which is good money. Now we also have our total daily price, last price to be at 0.6243 on a technical level, and today's daily change, of course, had minus 0.0010, and today's daily change, total daily change at minus 0.16, and today's daily open we have it to be at 0.6253, of course, which is expected to have an effective change on the market. So that's our technical analysis on today's currency pair NZD USD. Now let's move over to the stock markets. Hello, welcome back, guys. And today on today's stock markets, we'll be having a look at Coca-Cola. And we have seen that in recent times that major Coca-Cola bottler wants the prices and glass costs will rise further. And this, of course, might have a short-term decline of the commodity. Glass shortages has persisted for beverage companies and other manufacturers since the pandemic, with the issue compounded by Russia's invasion of Ukraine. It's quite a significant part of it. It's also led by the shortages that we had given the unfortunate war breakout between Russia and Ukraine, as we had a lot supplied here, said Nick Jangiani, finance chief of CCEP, which bottles and sells Coca-Cola products in Western Europe, Australia, and New Zealand. So we had to look at alternative sources of supply as well to ensure that we could continue having our products available on shelf. The bottler has nothing less been investing in its planned programs to sell more products in glass bottles that can be returned to hotels and restaurants. Amid concern about waste, CCEP has rolled out returnable glass bottles in France, Spain, and Belgium. Now, what to expect from this? We are most likely going to see a decline on the CFD, and it might be a downside to 59.49 at least, which is about 6 pips from the entry point. And if it was able to get to 58.97, which is 11 pips, we are looking at a breakdown or a breakthrough out of this support zone to a newer zone. If not, we are looking at a push up for reversal once it touches 59.26 and a continuation to get back to 60.7 for the major resistance landmark. Now, if we were to make an entry of this trade and catch about 9 pips, we are looking at good money, of course, and also going up, also having an entry point that from that point to 60.06, we're looking at good money as well. And that's our technical analysis on today's commodity market, Coca-Cola. I remain your host, Nick. Bye for now.